Credit cards are often seen as a trap, a financial pit that sucks in interest, late fees, and guilt. And most of us are taught to fear them, avoid balances, or something else. But what if the plastic in your wallet could rescue you from debt? What if you could use a credit card to pay off your mortgage, your car loan, your student loan, any loan, right? This isn't a trick or a loophole, right? It's a strategy most banks won't advertise because it flips the script on interest. Let's break it down. We're going to go ahead and break down something that to some is very controversial, but shouldn't be controversial at all. And I think the reason why it's controversial is because most of us have not been taught this concept. But I want to break down to you what the banks are doing to you. All right. Let's go ahead and say you've got the mortgage of $250,000. Let's say it like that. $250,000 at 6%. Okay. And the payment is going to be what? $1,499. $1,499 each and every month. Okay. Now, of course, this is broken down. The $1,499 is not going towards your mortgage. All right. As a matter of fact, I'm going to share with you where most of this payment is going. All right. So in the first month, right, let's go ahead and say, and let's be fair, right, $249 goes towards your principal, and the rest, right, the $1,250, that's going to be going towards the interest. Now, to be fair, it's actually going towards your interest over time, and over time, it does decrease. Isn't that good? And the principal increases, but it only decreases and increases by $1 or $2. Is this something we can flip the script over, right? Now, this method, other methods like, debt snowball, debt avalanche, not judging you if you do those, but they rely on extra, right? You got to have extra and then roll it over to this payment and that payment. But most families can't afford extra. Is there another way to actually pay not only the mortgage, the car loan, and other loans off with a credit card? Let's see. Now, remember, when you are paying loans like this, over a period of, let's say, 5 years, you would have paid the bank like something like $90,000, and you would have only decreased your principal by $20,000. Now, this isn't the only loan that's like this, right? Car loans, some car loans are like this, other loans are like this, and they're relying on people not noticing what they are doing to them. But today, we're going to go ahead and flip the script on that. Now, here is where it's going to get real, all right? Because we're going to be using our line of credit or our credit card, unlike the conventional methods. Okay, we're not going to cut them up. We're actually going to cut this up and all the loans up using the credit card. Now, just in case there are those that say, man, you can't use a credit card, right, for paying down mortgages and paying down car loans, check this out. All right, so I'm on my system right now. I'm in Plastic. This is my account. If you type in mortgage, you're going to see a lot of mortgage, a lot of lenders here. Vanta, AFPA, All First Mortgage, all of these things. So type in yours. We even have Freedom Mortgage here. All of these places that do accept mortgage payments from the credit card. Of course, it has to be MasterCard or Discover Card. And just keep that in mind, guys. So as we eliminate mortgages, eliminate all loans, just know that you can pay your mortgage with a credit card. So you actually can. All right. So let's go ahead and make sure we have, let's say, $5,000 at 10% on a MasterCard. The balance is $5,000. Why? Well, because we use that $5,000 for expenses. Once that $5,000 is replenished, okay, the balance is going to be zero. And whatever the limit is on your card, I want you to think about doing this. Using the 25 to 30 day, what is it called? Come on, you know exactly what it's called. 25 to 30 day window, right? That grace period. This grace period here is your gold mine. Because if you can pay this balance off in full, right? Whatever the limit is, whatever your balance is, you will not be getting charged interest when you do. So let me suggest this to you. Okay, you got the $5,000 in expenses that you usually get, or maybe $4,000. I don't know the numbers. Remember what we say in almost every video. Do not be distracted by the numbers. The principle is the principal thing. All right. This 25 to 30 day window that you have, you can actually use this $5,000 to attack the principal on your mortgage, your car loan, your student loan, whatever loan it is. What this does is it drastically reduces this deceptive 6% interest rate. Okay, it's not really 6% here. It's 110%. All right. Now, when you know the math and figure in the interest volume, you understand that 110%, right, the 6% here, is actually greater than the 10%. Now, I want you to know something. If you decrease this mortgage by $5,000, that's also going to decrease the amount that you pay the bank, the interest, all right? So that's a powerful thing. Now, with the balance that you have, that $5,000 balance that you have, how are you going to pay your card back? With the income that you get. And you remember that minimum monthly payment that they charge you, right? That they say that you need to pay. Do you have to worry about a minimum monthly payment when you're paying your card back by your income, with your income? Right? And I'm not saying it has to be all of your income. It can be a portion of your income, but as long as it's above that minimum monthly payment, you have nothing to worry about. So let's go ahead and remember that there's a grace period gold mine that you can take advantage of. Do you see why I mention over and over again? Balance and timing is what we need to be concerned with. Now, those that are Money Max account holders, we already know that. The machine actually does it for us, all right? So we don't have to worry about the math and the schedule. But look at this, $5,000, and you know it's right? The 25 to 30 day grace period, that's not something I pulled out of anywhere. All right, straight from the terms and conditions. So it does matter on what your terms and conditions have. All right, so let's go ahead and keep going. Now, I do want to warn you with this method, it does come with some transaction fees on the part of this processing. And I'll just go ahead and say plastique, right? And if you want to know more about that, we do have a description link below. This right here, okay, with the credit card, paying mortgages and car loans with credit cards, it'll be MasterCard and Discover that you'll need to have, okay? Visa and the rest of them, they don't like that, right? But MasterCard and MasterCard and Discover, you can do it, all right? Can't be a bank card. It's got to be MasterCard or Discover, all right? Now look, the transaction fee, let's talk about that. $145, we've done the math. Go ahead and recheck my math. $145 each transaction if you are deploying that $5,000 towards the principal. That's right, man. Listen, we're going to tell you everything. People were transparent with me when the velocity banking method came out. I'm being transparent with you, all right? But I want you to look at the numbers here, okay? $145. And let's say you're only comfortable doing this every year, right? So you're not going to be doing it, every 6 months or anything. It'll be every year. If you put that into the equations that you're going to be spending an extra $145 every year. Let's go ahead and see if you're continuing to put the chunking principal of $5,000 towards this mortgage here. Let's see where you're at, okay? In 17 years, about 17 years, you're going to be out of this mortgage, all right? 17 years. Doing it this way, you will be spending. So what this means is we're going to have to multiply the $145 by 17. Now, I didn't do this, but I'm going to go ahead and do this for you so that you can see if this is worth it or not. Now, if you're going by the traditional banking way, you're going to be spending in interest over the life of the loan over $239,000 on the traditional banking method. Let's see which one is better. Now over here, it'll be just over $150,000 that you'll be spending, right? Doing it by this method. And again, It's with just the $5,000 each and every year. I'm going to go ahead and add up the $145 multiply it by 17 and see where we're at right now. So to be fair, we do have to add an extra $2,500. I'm just going to go ahead and round up to this 150. So let's go ahead and add that, an extra $2,500. Okay. And what is that going to bring us to? Guys, check my math here. It'll bring us to $152,500. When I was in school, they told me that $152,500 was less than the $239,000. All right. Now, I know the question may be on your mind. Wait a minute, CJ. I still have expenses. You sure do, right? That's why you have to look at your statement date, what the Money Max already does for many of us, right? So we don't have to do this. But look at your statement date. Look at your payment date. And then deploy the $5,000 in the most strategic way you can. And keep this in mind, that 25 to 30-day grace period, whichever it is for you, will be when you need to make sure you pay all of that back, right? And then when your income goes in, right, you can then, from the credit card, pay those expenses that you need to. It's all about making sure you're transferring the correct way, right? Folks, if you need more of that, we do have it. And you already know the example about the line of credit, $10,000 line of credit, and how powerful that is, right? When you have the $10,000, right? And you have a cash flow of $1,000, right? You're going to be paying it back each and every month. So that $10,000 there is going towards that principal every 10 months, because 10,000 divided by 1 is 10. And that's your velocity term. And that's how people are getting out of mortgages without a second job, without an decrease in expenses, having to be on the red beans and rice diet, whatever it is. You don't have to, right? There are tools out there to help you, banking tools, legitimate tools that you can use. Does it have a fee attached? Yes, it does, right? The $145, that's the transaction fee. Don't forget as well, right? Your interest. Oh, the interest. If we're paying it back within that 25 to 30 days, do we need to worry about the interest? No, we don't. I want you, if you're curious about this, I want you to see this video right here. And I want you to tell me if you have booked a call with us or not. Folks, we got to share with you what's been helping us and many of our clients, and I'd be glad to do it. God bless you, and we'll see you in another video. Now, in the comments below, I want you to tell me if you've been told to cut up your credit cards.